So part of the reason why we wanted to provide this presentation today is because the Paycheck Protection Program, also known as PPP, application deadline has been extended. Small businesses, independent contractors, and self-employed individuals now have until August 8, 2020 to apply for the PPP loan. The program previously expired on June 30th. However, the Senate and House both unanimously approved this extension, giving potential borrowers more time to access the program under the existing terms. So while this presentation will not go into details on the PPP loan or the application process, we hope you can take away some key points that will help build a better banking and lending relationship with your financial institution or advisor so you can have greater success when banking and lending needs arise. If you want more information regarding how to secure your business through the CARES Act, please visit nar.realtor/financial wellness. There will be a testimonial video on how other realtors successfully obtained the PPP loan. Now at this time, I would like to introduce our two speakers today. First, we have Tim Vohar, who is a supervising broker for an office of 25 top producing agents in Norfolk, Virginia, as well as the Director of Education and Training for his firm for over 400 agents. Tim has been licensed for over 20 years and currently trains, educates, coaches, and mentors both experienced and newly licensed agents. He develops, writes training materials, including CE, PL, and broker management courses. His real estate passion is ethics and Asian empowerment and development. Next, I would like to introduce Sarah Steadfast. With over 30 years of residential mortgage experience, Sarah has helped many people achieve their goals of home ownership. Sarah currently serves as venture president of Newtown Mortgage, as a joint venture between Town Bank Mortgage and Berkshire Hathaway Home Services, Town Realty in Hampton Roads, Virginia. She leads a team of loan officers dedicated to serving home buyers and homeowners. She is a graduate of Virginia Tech with a BS degree in business finance, and Sarah is active with the Tidewater Mortgage Bankers Association, Tidewater Builders Association, Hampton Roads Realtors Association, and is past president of the Virginia Mortgage Bankers Association. Tim and Sarah, thank you so much for joining us today. We are really looking forward to this presentation. Really appreciate you guys joining us.
Great, thanks, Brittany. We're happy to be here.
Thank you, Brittany. Sorry, I had a little trouble there unmuting myself. I apologize for that. Thank you, Sarah, for joining me. Thank you for Brittany for the introduction. We are very excited to be here and to give you all some information, hopefully, that will be useful, as Brittany mentioned about the PP loans, but also going forward and building your relationships with your lenders, with your bankers, with your financial planners, with the financial aspect of running your business, developing your business. So hopefully we'll give you a little bit of a nugget in three main areas that will help you. The main thing, though, is building those relationships, and that's why I've had Sarah join me today for this presentation, because Sarah is my go-to person for anything that's financial, starting with mortgages and lending to any other banking questions I have. Even though she's not a banker, she knows, has 30 years of experience, how to build those relationships. She knows where to go and look for things. So it's very important to us to have a good relationship with our financial people. And Sarah's the person I start with. So that's why I've asked her to join us and share some insights and thoughts as we go along the way. So Sarah, let's go ahead and get started, unless you want to say anything else on that. Okay.
Nope.
All right, so the agenda will be a little bit on mortgage lending, developing those relationships with the loan officers, a little bit on financial institutions, some private banking, some connections there, development with that, and then a little bit of financial planning. And as Brittany said, we are not financial planners, we're not tax accountants, but we do have knowledge and information we want you to share. And what we want you to do is take notes and then go ask questions and do your own research. So hopefully you've got something to write or a notepad or something online to take some notes from this. If you don't, that's okay. You can have a notepad ready to go and rewatch it. As Brittany said, this will be available on Friday for you to rewatch and take some notes down. Finally, questions that you want to make sure you ask all the financial professionals with whom you choose to work or decide that you might interview to decide if you really want to work with them. So those are the 4 things we're going to go through here for the next 40 minutes or so. All right, first off, selecting a lending institution, be it for mortgages and or loans, depending upon the state that you're in and what you guys are using. The reason it matters is when you're working in a financial relationship with a customer, helping them buy and sell a home, if you have a question on Friday night at 9 o'clock or Saturday morning or Sunday, you want to know that you have somebody who you can reach out to. You want to have that connection where you can text them or email them and know you have a reasonable expectation of a return phone call or text or email within whatever time parameters they work, and that you don't have to wait till Monday morning at 9 o'clock. So I think it's very important that when you work with and you select these institutions, you have an understanding of how they work, and does that work and align with how you work and how you run your business. So what should you ask? You should ask, what are their hours? What are their availability? When do they turn their phone off? When do they turn their phone on? Are they available on weekends? Are they available after hours? Questions like that are very important for you to know and understand as you're developing this relationship. It's your job to provide customer service to your clients. And if you don't know when they're working, the lender is working, you will be at a loss at potentially Friday night, 8 o'clock, or Saturday morning at 9 o'clock, depending upon what you have going on with your clients. That's why it's going to help you to understand what they're doing and how you're working. It helps you because it increases that customer service. It increases that ability for you to perform your duties and your tasks in as timely a manner as possible, especially in our marketplace. Some of y'all may be experiencing some of this as well. We're having multiple offers on multiple situations in less than 3, 4, 5, 6 hours. Had an agent yesterday tell me she received 8 offers in 3 hours of the house being listed. So we're in that situation. It's really nice to know if you're writing one of those offers and it's a Saturday or Sunday or a Friday night late, that you have information or connection with that lending officer. And now I'd like Sarah to jump in and add anything that she thinks I might have left off or missed.
No, I think that's great. I think we all talk about the relationships that we're in and how important the relationships are. And as Tim said, you want to know that this person is going to be available, even if it's just a quick question on the weekends or at night. I think that's just a huge thing. So I think you've brought up some great points there, Tim. Thank you.
Thank you, Sarah. All right, so when you're looking to or for a lending institution, now we're talking primarily right now from a loan or mortgages perspective, but it will apply across the board for what we're talking about here today. One of the first things you need to have a conversation with them about is customer service. What kind of customer service do they offer to you, the agent? And then what kind of customer service do they offer to your clients, to your buyers, and maybe to an extent your sellers, depending upon the relationship that you have and what they're doing for you. Primarily, though, we're focused here on the support they're going to be able to offer to your buyers. And those groups, they don't just stop at the loan officer. It also goes to the processors and the underwriters, the people that you're not going to have conversations with. However, they're very vital and important to the loan process, and your loan officer is talking to these people and making sure that documentation is right, numbers are met, the different components of the loan are in alignment. And Sarah, do you want to jump in and say anything on that? Because I know you know more of the back end than I do.
Right. Well, I think just basically with the customer service and the support, it's so important that when you have that relationship, you know whether that lender is a lender that needs to send their files off to some underwriter in Timbuktu. Of course, everything has changed with COVID, in that the majority of our staff is working from home, so it doesn't really matter whether they're sitting in the same location with an underwriter. But if a loan officer and his team or her team has a relationship with their underwriters and their secondary marketing department, all these things are so important to that relationship.
Thank you. That's the kind of thing that I depend upon Sarah for, and that's why I like to have her in this class or with this seminar for you guys today, because she brings those pieces of information that I know are important, but I don't have the wherewithal to keep all of that information. So I don't try to be an expert on anything. I'm sorry. I don't try to be an expert on everything. I try to be an expert on the things that I'm supposed to be an expert on. And I let Sarah be an expert on the things that she is supposed to be an expert on. So that's where that relationship comes in. It works all across the board with our relationships. So that's where we're trying to make sure we really stress to you. One of the things, Sarah, do you want to talk about the diversity of the loan programs that are out there?
I would love to do that. I think that's a key, that you want to make sure that the lending institution with whom you're speaking does have a diversity of programs. You don't want to get in trouble later because the company that you went to doesn't deal in bond programs for first-time homebuyers, and then afterwards the first-time homebuyer says, well, why didn't you tell us about that program? And you'd be like, oh gosh, I didn't realize they didn't do that. So bond programs, I kind of look at it as the first-time homebuyer is the bottom or the beginning of the food chain. So the little guy who goes out there and does the first-time homebuyer, it's really important that we take care of them. So then you're going to be looking, do they do VA and FHA? There's certain FHA guidelines in effect that lenders have to have a certain amount of asset base in order to be able to do the FHA loan program. So it's really important that you are able to do, the lender's able to do VA programs, FHA programs. And when you talk about FHA, FHA is also has the 203K, which is a rehabilitation loan. So what if the appraisal comes back on and the house needs so many repairs, the seller's unable to repair them? Great, let's look at some kind of a rehab loan. We then also look at FHA has the reverse mortgage. The reverse mortgage is a purchase and or refinance program for buyers and homeowners over the age of 62. That's another great opportunity to make sure that your lender has the reverse program. Conventionals are pretty much vanilla. There are loan companies out there, that's all they do is just a conventional vanilla product, and that's great, but sometimes that's not sufficient. Jumbos are going to be in our area anything over 510,400. That's here in the Tidewater area. And that is, we have non-conforming, and then we have jumbos. But these jumbos, that's important. We're seeing the values of these houses going up, particularly with the multiple offers, as Tim was discussing. So they need to have jumbo programs. You know, how does their jumbo loan work? Is that something that they have available? Then you might want to make sure they've got a construction program that you could actually buy a lot, build a house, just so that you have all the tools that your borrower is going to need. So I think those are just kind of the basic ones. And then I'm actually going to jump right into the financial applications, the apps on your phone. Is it all right if I jump into those, or did you?
Yeah. Well, let me just put a little disclaimer out there, and hopefully Brittany can take a note and grab the link and add it to the back of the presentation for Friday. Can you, Brittany, please grab the link for the jumbo loan limits in the different market areas so that people in their respective markets can click on that link and see what those jumbo limits are, because those are government controlled and they'll be able to just reference their area. So if
yep,
Brittany,
Brittany, what you're actually looking for is the conforming loan limits. So they'll give you what's conforming and below, and then you'll pretty much know that everything above that is it does not necessarily go by the regular book. But that would be at conforming loan limits for Fannie Mae and for Freddie Mac, the two main servicers in the market.
Okay, perfect. I'll make sure to include them when we upload the presentation on Friday. Thank you, guys.
Thanks, Brittany.
Great.
Go ahead, Sarah. Jump into the calculator apps.
Okay, yes. I like the way you say calculator app, but it's really way more than calculators. What we find is we have an application. Somebody calls up and the loan officer says, yes, you'd like to get pre-qualified, and they say yes. Well, would you mind filling out my app? So we just shoot an app to the borrower. The borrower can go in there. They can put all their information in there, or they can just say, no, I'm not really comfortable giving you all this information in an app. I'd rather talk to somebody in person. But when they put the information into the app, it's really great for the lending institution, just purely because the borrower knows what their Social Security number is, and they know what their address is, and there's a lot less room for error. It's a lot more clear, and just kind of starts the process off. So you want to have an application for your mortgages, online banking. And when we get into talking about the banks in a little way down here, you'll be talking about, gosh, well, do you like paying your bills online? I tell you, when I got into online banking and realized that I didn't have to stick a stamp on that envelope, and I used to put a little date up in the corner as to when it was due, so I knew when to mail it, so that I didn't mail it too soon. And now you just set it and forget it, which is just wonderful, and instantly look and see if there are any issues as far as scams on your account. So I think that's great. And then there is the basic calculator. I no longer have my Hewlett-Packard calculator that I had in college, but I kept it until the buttons were worn off. I probably should have kept it, but now these apps on our phones are so much easier. I was talking with a borrower yesterday, and I said, you know, I got into this business, and I hate to age myself, but the interest rates had just gone from 14 to 13.5, and I actually had a little book with the interest rate factors in it. Well, that little book doesn't go below 4%. So these rates we're seeing today in the twos, I would be out of luck with that little booklet with the interest rate factors. So important that it is an accurate calculator. Sorry. So there you go.
Oh, great. Thank you, Sarah. That's fantastic. Then I don't have to cover any of that. The familiarity with people it's probably the most underrated value of a loan officer. The loan officer who's in my office here helping with the agents in ours, he's a baseball guy, he's a dog guy, and there's other things that I won't share. But I know things about him that are personal to our relationship, and it creates a bond between myself, and I'm able to turn that and utilize that into a really good working relationship because he cares about my business and I care about his business. So it's a symbiotic relationship of trying to make each other grow and be successful through supporting of each other. So when you're looking for and you're working, it's not necessarily always the products and things of that nature. The person starts and develops out of there is the key. So being familiar, knowing that person, knowing them by face and seeing them and being part of their working world or their working life is so important to building that familiarity. So really focus on that relationship building along with what products do they have that go out here. One of the things I'll encourage you to do, especially if you are a new agent, and even if you're not new and you're just not experienced with doing it or haven't done it in a while, go out to your associations, go out to your MLS events, go out to your association events, go out to your different groups of businesses and connections and really talk to people and meet with them. And I understand COVID and Zoom meetings and the need to do that. I'm saying when you're able to go and you're able to meet people, and if you still have to wear a mask, then you can wear a mask. I smiled at somebody today and I saw her smile back. It was funny. We both had masks on, but we both knew we smiled at each other. It's so go create that bond, create that familiarity. All right, let's move on here. All right, selecting a financial institution. Banks for profit, credit unions for not profit. And on the video replay of this, there will be a link to some more information on banks and credit unions. That is also on the NAR Financial website that Brittany has supplied on or a link. She's putting that link into the video that goes right to the homepage of where you are today. So why does it matter? Well, it matters as to what is your desire as a business owner. So now we're not necessarily talking about you as an agent. We're talking about you as a business owner, a business entity. What do you need for that bank or that credit union to help you run your business, right? Because you're doing multiple things. You're helping other people buy houses, but you're also bringing money into your family, into your financial situation, to pay your mortgage, to pay your car payment, to pay your phone bills. So you want to make sure that you're maximizing that business relationship. So in the event that we have a COVID situation or some kind of crisis and the government does come up with programs like the PPP, you have an inside connection, a favorite person who's going to be able to say, yes, I know Tim, I know Sarah. They come in, hey, what can I do? Hey, did you hear about this program? Right? So that you're getting emails and you're getting communications from your bank, but you may not see them. We get lots of emails. You walk into the bank and they go, hey, did you see the PPP? I know you're an independent owner. I know you're an independent contractor. They remind you. It's not that you're getting something that everybody else doesn't get, but you created this relationship that asks them or desires of them, wants them, whichever word is the right word for you, to be involved and to be encouraging to you. So it's very important that you develop these relationships, and you have to decide for yourself, which one do you want, a bank or a credit union? Banks are for profit, right? So they're bigger, they're all around the country. You've got some benefits, some negatives to that. Credit unions, smaller, more local, benefits to that, negatives to that. So read up on that, decide which one you want to be involved in. You should ask about rates. You should ask about checking. You should ask about a lot of services that I'm going to go over on the next slide. It's going to help you no matter what in creating that relationship. So let's jump into the slides here and talk about it a little bit. Sarah, do you have anything you want to say before I go? Okay.
No, I will. I will mention one thing when you talk about, they come in and say, hey, I know you're self-employed and maybe you need this PPP loan, but I think that the best thing about having a relationship is when you walk into the bank and they say, oh, hi, Sarah, how are you today? I know that you're self-employed. I mean, just that familiarity is just a nice, warm, fuzzy feeling.
Yeah, it is. It feels good when you walk in and someone smiles at you and recognizes you, and you're not, they make you feel like you're not bothering them or interrupting something that they were doing, that you are the most important person. And that's one of those things about building that relationship, and then saying something to them nice too in return. The customer service, the customer support, the only way you're going to find out about customer service and customer support before you affiliate with a bank, I don't know, or a credit union, to do this is without going in and experiencing that greeting, experiencing that welcome, experiencing that coming in and going and saying, hi, I'm thinking about joining your bank. I'm thinking about joining your credit union. That's where that customer service and support is. You want to know, and you got to feel it. They can give you a list of 27 things that they do, or 127 things that they do for customer service and support. But until they show you by you walking in, because sometimes you can go to a different branch and have a totally different experience, because the people that you go to on the regular branch, they know you by familiarity. They know you by face. They know to say, hi, Sarah. It's not rote to be welcoming. And sometimes people are having bad days. So that customer service is really going to be best by going in. Again, COVID situation, COVID time, mask. I get it. I understand it. I'm not telling anybody to go do anything you're not comfortable doing. What I want you to do is do it when you're safe, however manner you can. You want to check about checking, savings, and money markets. What are they paying? What are the charges for them? There are charges for checking accounts. If your money goes below a certain level in your money market, then there's a cost to that in some situations. Are you still using paper checks? Do they charge you for paper checks? Can you do electronic checks? So there's a lot of questions that you want to ask regarding the checking fees, the checking costs. What's the rates on the savings? How often are they adjusting it? So these are questions you want to know and you want to compare. If you're a spreadsheet person, you're going to be really good because you're going to have lots of columns and lots of rates. If you're somebody like me, we're going to take notes and then we're going to be looking piece of paper. But make sure you're asking these questions, because they always say that the rich get rich when they make their money work for them. The rich get rich when they make their money work for them. Or another one is the rich get rich while they're sleeping because their money is still working. So think about that. The rich get rich while they're sleeping because their money is still working for them while they're sleeping. So that's important. Those pennies matter. Find a penny, pick it up all day long. You'll have good luck. I'll bend over and pick a penny up all day. All right, the business account management. So you want to make sure, and if you've been on any of my previous ones, I've talked about this, having separate business accounts as opposed to personal accounts. keeping your money separate. And I understand it might be tight for some people, and you put everything into the business account and then you move it right into the personal account. That's fine if that's where you're at in your business. That's great. There's more information on that in some other seminars, so I'm not going to go too deep, but you want to make sure you're able to get business accounts and personal accounts whatever your institution is, and that they're not paying, or you're not paying, extra charges and fees to have these multiple accounts. Do they have credit cards or debit cards associated with it? What's your limit? What's your fees? What's your rates? So again, these are questions you want to be asking. Electronic funds transfers. I use this word because you have federal wires, you have ACHs, you have point of sales. So I just use EFTs as a generalization. And I think Sarah did really good talking about the banking apps and checking them out. I'm not sure that there's really a whole lot of demos for banking apps. So if you haven't selected a bank or you haven't selected a credit union, perhaps you have a friend who has. Ask them, what do they think? How do they feel about the banking apps? And be specific and be general, both ways, so that you understand what's going on. But also take into consideration the person you're talking to, consider the device they're using. I always recommend, when people are looking for apps to add to your phone, go look at the reviews, and when the reviews are all great, make sure the reviews are for iPhone people if you're an iPhone person. I'm a Samsung person, so I'm not necessarily paying attention to the iPhone reviews. I'm looking for Samsung reviews. So check that out too when you're looking at those banking apps, looking for the reviews to make sure they match up with your device, with your specific device, even the operating system, if it does have that. Sarah, anything else you want to add to the apps while we're there? Or any of the other things at this point?
Yeah, I mean, the one thing I was thinking about is the whole relationship thing. We all know that our businesses, the sales that we're in, it is a relationship business. So if you are able to develop a relationship with the banker, even if it's just the teller, the receptionist, whomever it might be, that they know what you do. So when they know what you do, and maybe somebody walks into the bank and says, oh, I'm trying to find a house. Even if I'm trying to find a rental, we all probably help with rentals sometimes, that they can say, oh, you know what, we have a customer at the bank and here's their business card, or let me have them call you. Can I have them call you? So that you are then picking up relationships with those, because it's all who we know and who we connect with. And the other thing was thinking about with the referrals backwards and forwards. I mean, the bank makes its money basically on things like, obviously, on the loans, but the interest rates on the loans are so low right now, banks don't necessarily make interest there, but they make money on your money coming in and out of checking accounts and savings account. They call it demand deposit accounts. I mean, that's what the bank is trying to do. They're trying to increase those accounts. So you can even help your banker out by saying, wow, I've got these out-of-town buyers coming in. I'd love to introduce them to you. One of the things we use the bank for too is if we've got a borrower on a mortgage who has no credit, and we will send them to the bank and have them open a secured credit card. So again, it's just really easy. Hey, call the banker. We actually have a bank in our building. I call down and say, could I send down this person? Or of course, we're, like Tim says, we're doing everything virtually. Calling them, would you mind calling this borrower and setting up a secured credit card for them? So that relationship can work backwards and forwards. It's not just you getting them to help you, but for your personal stuff and your business stuff, but it's also helping them help you get business. I think that's just another point. You probably have a slide about that coming up, but I'm sorry.
No, I don't. And you made a good point. I think you need to clarify real quickly a little bit. Secured credit card. Why is that beneficial to the agent, and being able to know that term or that reference to bring it up?
Okay, so you have we run a credit report on somebody, and it says they have no credit scores because they have insufficient credit data. They have not borrowed any money to do anything, and they don't like it. They like to pay cash for everything. Well, a way to actually force a credit score is for you to borrow, to get a secured credit card, which basically means typically it's going to be between a $300 and $500 limit, and they would have that tied to their checking or savings account, typically a savings account, where there is $300 to $500 that can't be touched by that person, but so the bank knows that this is a good credit risk because the money is there. They typically then have to take that credit card, use it, pay it off. Within 30 days from that credit card being paid off, they should be able to get a credit score. We usually recommend that they do it 2 months in a row, but it can then actually get a credit score put onto the account so that we're able to help the borrower with a mortgage.
So now this is going to come from the lender. The agent doesn't have to come up with this. The lender is going to come up with it, but the agent does need to know that this is an option and a process. If somebody says, I don't have any credit, they can say, hey, let's come talk to the banking lender. Let's talk to the loan officer, one of those two. And then it becomes 3 people necessary, maybe in that connection, the agent, the banker, and the lender coming together.
Correct.
Okay, great. So hopefully that answers, and there might be some questions, and we'll address those. I think Brittany will jump in if we need to. All right, we're going to talk about online and brick. I'm going to jump over here to the slide real quick. So what happens if you have brick and mortar? Well, you should be, as Sarah said, be frequently visiting so they know you by face. They know you by name, maybe even. So that's how often you should be going in there. You're trying to, again, establish that rapport with those receptionists, those tellers, and perhaps even the personal bankers who are sitting in the little offices off of the lobby. Now, when should you go to the brick and mortar versus doing it online? Well, I like to think, can you ask Google, Siri, or Alexa, or whatever you might have on your phone or your device, right? They answer a lot of questions. I have an Aiden. He seems to know the answers to everything, and being serious, it's not that he's not right, because he's right probably more not than that. But what you can do is go into the bank, go into the credit union to check the rates, to get a routing number. I went into the bank because I would question about routing numbers, and Google wasn't giving it to me. I wasn't satisfied with the Google answer, so I went into the bank to get the routing number so I had the right piece of information. To find out about the apps. Maybe they can demo the apps. Maybe they can show you how their app works. So things that you could probably do online, and we're not necessarily in a COVID time, these would be things you want to go into the brick and mortar. If you get a check from Aunt Betty or Grandma or Grandpa for $50 for Christmas, instead of scanning it with your phone and depositing it, take the check in, sign it, meet the teller, have a conversation. So those are other things that you can do. And that's really why you want to get into that brick and mortar, is because there are people that are still going in. And as Sarah said, if you can create that relationship and they know you're in real estate, then great. They know more people. They have lots of people coming in and out, so you can develop that relationship. Now, you have time frames that are compressed. You can't do it at night, so think about, how badly do I need this piece of information right now? Can I wait till tomorrow where I can go put myself in front of that receptionist and that teller? So I think when you go into the bank, there's a minimum of 2 people at any credit union or bank you're going to go into. You're going to have the receptionist and you're going to have the teller. There's a third person that you may or may not see. That's also the security guard, right? So that security guard's there too. So always make sure you say hey to the security guard. Hey, how you doing? How's things? It's hot out here. Can I get you ice water maybe? I don't know. It's whatever it works, right? Because that security guard is somebody, and you can have it and develop that relationship. Because here's the thing I know about the security guards and the tellers and the receptionists, because I've worked in buildings across from them. When there's nobody in the bank, they kind of all congregate together. So if you come in and they see you and, oh, that guy comes in every Friday, or that lady comes in every Tuesday, they start to talk about you. They talk about the way you look or the way you dress or the way you are with them. They create these bonds and they create these impressions. So you create a great impression with one, it starts to trickle over to the others. So visiting those brick and mortar are very important for developing and growing this business. All right, let's move on here to private bankers. Can my credit score affect my ability to borrow or qualify? Sarah? Say it.
Yes, it can. Yes, it can. Your credit score is very, very important, and it is very important that you keep it in a good range. I think that we do still have lenders out here who will do a 580 credit score, but quite frankly, a bank, when they're loaning you money, a mortgage company when they're loaning you money, is looking at your credit to see what your history is of payments. I mean, that's really what they're looking at, is how do you pay your bills? And so it is very, very important, very important.
All right. And then, are they affiliated with my lender's entity or a third party? So in our case, Sarah and I, we have a bank and we have a lending institution of mortgages. They are part of the same entity, part of the same family. So we have that connection. You might go to your favorite lender, and your favorite lender might just be a mortgage company. They might not have a bank, but do they have a bank that they have a relationship with, right? So you might want to get that information and explore that option, because there's a connection, there's a relationship. Who do you use, my favorite loan officer, as your banker? When you need a banker, who do you use? What is that person? And maybe it creates off of that. Maybe your banker tells you and dictates your loan officer. I don't know where you're at in the country. I don't know where you are. So these are different avenues that you need to go and explore. You can go one way and this way, from A to B or A to C to B. It doesn't matter. Just making sure you're developing those. How are they compensated? Do I get anything in return? Sarah, compensation.
Yeah. I mean, talking about private banking, I think I actually connected with a couple of my private bankers with the bank that Tim mentioned that we're associated with, and one of them came back and said, I strive to provide a concierge banking service that offers the highest level of expertise and personal attention, and we are available to our members 24/7. And I think that's the thing. I mean, working with a private banker, you need to make sure that you're getting that attention. But when we start talking about giving things in return, I'm sure that you are all have heard of RESPA, the Real Estate Settlement and Procedures Act, that says you can't give or receive anything of value. And when they say anything of value, it used to be like more than $25, and now they just say anything of value, that for giving referrals, that is strictly forbidden by law. So Section 8 of RESPA says that very clearly. So we have to be very careful when you're talking about compensation. But typically, a banker, as I mentioned, they are going to be compensated just over the overall profits made by the bank through holding demand deposit accounts and doing the loan and the other banking type things.
Great. Thank you, Sarah. I appreciate you reaching out, and that was a great little bio too. So if you have a third party you're looking at, or a private banker, I think, Sarah, what would you say they would do to get an email or have a conversation where they get a response by that? Just go to the receptionist, don't you think, and say, hey, I'd like to speak to a private banker, or call the bank and have them reach out to you with that type of bio or vision statement, mission statement?
Yeah, I mean, we are out of the bank is definitely open now. It was closed. It was only open to appointments. But Tim's right, either with a teller or with the receptionist in the bank, or even ask to speak to the branch manager. Say, I'm looking for somebody to work with. And I think that, again, that's kind of a one-on-one thing. You're doing much better by going in and looking face-to-face to see whether you like this person. As Tim says, you're going to develop this relationship. You want to make sure it's somebody you like. If you don't like them, then you need to make sure you find somebody that you do like, that you're comfortable with, that you can trust. I mean, I think that's the big thing, that we want to make sure somebody's being honest with us, and we want to be able to trust what they're telling us.
And one of the things I want to make sure, where Sarah's saying the word like, you don't have to like this person to want to go to the baseball game with them or go, do anything with them. You need to like them and who they are in a business setting, and the way you feel they treat you and how they would treat your clients, right? So if they don't sound like they're warm and fuzzy and go watch baseball games with you, like I would love to go sit and watch a baseball game all day, that's okay. They don't have to. They need to give you the warm and fuzzy about banking, about lending, about giving you advice, solid advice. So just throw that in there too. All right. Is it common for them to notify special offering a service? You're going to get emails. You're going to get notifications. As Sarah and I have been saying, though, when you walk in and they greet you by name, they're like, hey, did you hear about? Did you see this new program that we might be offering? That's one of those big things about having that personal connection, is the teller, the receptionists coming in and going, hey, I don't know if this is helpful to you, but I know we just put this new flyer out, and they hand you the flyer. They indicate the flyer in the bank, or they in the coffee room, or whatever the setup is in the credit union. So, Sarah, do you want to have anything added on there?
Nope. I just wanted to mention that the other banker that I reached out to, she emphasized trusted relationships. They want to build a trusted relationship with you, just like you want to build a trusted relationship with them.
Yeah, and I think that goes right into the customer service and the relationship building. If you walk in there and that person says something to you, you kind of trust them because they knew your need, that you're a small business and you might need a PPP. That's trust. You've created trust through that building of that relationship. So that's a fantastic thing. All right, we're going to move into our third section here to finish up. All right, selecting a financial retirement planner. Why does it matter? I think we've experienced right now the last two groupings. Why does it matter? So I'm just going to jump into the slides here. What I should look for in the long-term experience, background, and track record? Well, that's up to you, because some of you might be new agents, right? And you might have a new financial planner. I don't know, but you're going to have trust in their ability to perform and provide you with service, benefits, knowledge, information. That's like you thinking about, how am I being hired as a real estate agent? What would I look for in a real estate agent? So I think when you're doing that, think about you and your trust level and what you would say. And there's where you go and you ask the same questions to that potential financial planner. What fees do I pay or incur? You've got to know, how much is it going to cost you? I would not talk to just one person and say, okay, sounds good. I have several agents who come to me and they're like, oh my gosh, I need a new financial planner. Do you know how much they're charging me? And I'm like, wow, you really got a good rate, because somebody over here is getting this or somebody over there is doing that. And they're like, you're kidding. I'm like, no. They're like, oh, okay, great. Thanks for the information. So ask them for the fees. Ask them what it costs to utilize their service. Huge, huge factor. What's your risk tolerance? I don't know. I go to Vegas. I'm a gambler. I have a higher risk tolerance than some other people. If you're not going to Vegas or you're not buying lottery tickets, then maybe your risk tolerance is not as high. That's important. You need to read about and go do some research on risk tolerance, on mutual funds, on bonds, on stocks, on where they're putting your money, what they're investing it in, right? That's you. That's your job to determine your risk tolerance. And then own it, stick it, keep it. Don't let them talk you out of it. It's your money. You be responsible for it. Take your risks if you want to, but that's only because you've done calculated risks. You've done the homework. All right, what certification should I be looking for? Well, I always talk about us as realtors and real estate agents as having the ABCs after our names. If you don't know what the ABCs mean, what does it matter? You need to look at what the ABC says and says, what did this person have to do to earn this ABC? And then ask them about the ABC. What did it mean? What does it, if they go, it didn't really mean anything. Okay, well then why are we giving any credence to it, right? They'll be honest with you. People will be honest. They will tell you what it means to have that designation. People will be honest. You just have to ask them. Absolutely. Should I get a written agreement outlining the service and fees? Absolutely. You should not do anything until you have a proposal. You can take it home. You can digest it. You can compare it to others. It has to be written. It has to be out there. Sarah, anything else?
The only thing I did want to mention, just as you said, you've had agents come and talk to you. I think it's really important that you ask friends, coworkers for referrals for somebody, and then ask them, why are you referring this person to me? I mean, I have an example that I kind of met a guy and I introduced him to my mother, and he did a phenomenal job with the small amount of money that my mother had. And it was like, wow, he did such a great job that I use him now. But I think it's really important that you get referrals from people, because like Tim says, you could have a string of alphabet soup behind your name, but what does it really mean? So I absolutely get referrals from others and ask them why they're referring. And if they say, well, he's in my BNI group and I feel like I should, okay, but if it's, well, actually I used him and he did a really good job for me, that's the kind of support that you want for somebody that you're looking at.
Thank you for adding that, Sarah. That's very important. I sometimes forget that we're in the referral business and we need to ask for referrals back. So great piece of information and advice. All right, let's jump over to the last slide I think we have here. Just about on time, Brittany, I think. Questions to ask anyone helping you with financial components of your business. What you have to figure out is, how do they work their business to meet your needs, right? You're going to work your needs and your business around your clients And what are you willing to sacrifice? What are you not willing to sacrifice? How are these people, bankers, lenders, mortgage loan officers, financial planners, how are they going to customize their business to meet your needs? If they're not willing to work in the same alignment with you, it's okay. It's 100% okay for you to say, okay, not going to work. You can tell them, yeah, I appreciate your time. I appreciate your energy, appreciate your effort. I'm going to go in a different direction with somebody who I feel I align with more. That's what it's about. It's okay to say no. We have been ingrained in our minds that no is a terrible word. No, when used properly, it's a valid tool. It says, I heard you, I listened to you, I evaluated, and I'm going to go in a different direction. Ask them how they're going to customize. How are they going to meet your needs? If it doesn't line up, it doesn't line up. It's okay. Don't try and jam a square peg into a round hole. It just doesn't work. So don't start with that. Sarah, anything else on that one? No. How should I look for terms of good communication? All right, now this is an important one because this works with your real estate business as well. If you're a texter and the person's not a texter, it's probably not going to line up. If you're a person wants to talk on the telephone and they don't want to talk on the phone and your clients want to talk on the phone, maybe you need a different group of people. If you're an emailer, they're an emailer, they're a Facebook or a Twitter or Instagram. How are you going to communicate? I always try to be a chameleon because that's who I am from a real estate perspective. So I try to communicate with people the way they want to communicate. There's people I communicate regularly with on text, people I regularly talk to, people I Facebook message, people Instagram message me. It doesn't matter. I try to accommodate the people that I'm working with. So are they going to communicate with you? When are they going to communicate with you? Are they communicating within the timeframes and the constraints that you're looking for? Should I consider how many clients are currently working with? I don't know. How many clients are you working with? How many clients can you handle? Do they have an assistant? I think that's important to know what their response time is or the response rate. Or they might say to you, here's my hours of when I'm talking to clients. Here's when I'm answering questions. Here's when I turn off my phone. Here's the voicemail. You get the voicemail says, hi, if you're getting this message before 8 o'clock in the evening, I'll be returning those calls tonight. If it's after 8 o'clock tonight, it will be the first order of business tomorrow morning after 9 a.m. That's good communication. They're telling you how they're working. And if you can live within those parameters, fantastic. Does the advisor take custody of or have access to my assets? I think it's very important for you to know who controls your assets and what they can do with it. If you have no idea, don't sign anything. Don't give money. Do not give away anything that someone has control over, and there's no double verification as to moves on your finances. Make sure that you control every move. You give permission, and they can't do it without your permission. Very, very important. Sarah, I saw you shaking your head.
Yeah, I mean, I think there's a fine line. The reason you're picking these people is because they are experts in their field. It may be that you can set it and forget it. I mean, I have friends who do their own trades and things like that. I couldn't do that. I just kind of say to my advisor, hey, I'm relatively conservative. I don't gamble in Las Vegas. I just watch Tim gamble. And that's about it. And go, oh God, Tim, no. No, I'm just kidding. But I'm not very, other than the fact that I'm in the mortgage business, I don't take a lot of risks. But I think that's one thing too, that you need to get to that comfort level that maybe you do watch every move they make for the first few months, but it may be that you feel that comfortable with them that you get down to once a month that you chat with them, or once every couple of months. But that's one of the things you absolutely want to know. They're not absconding with your funds. And that goes back to all the online, that you're able to check your accounts online, see what the activity is, and make sure it's basically going in the right direction. But I think that you do need to give them some autonomy to work on your account, because they are the experts.
And I think you just answered the last question. How should they be helping me achieve my financial goals? You should be having those conversations on a semi-regular basis, whether it's every month, every other month. It's your comfort level and what their comfort level in communicating with you is. If you feel you need to have a conversation every month, be honest, be open with them. Hey, I'm going to want to have a conversation with you maybe for an hour once a month, or 30 minutes every month, or whatever it might be. And they're like, good, I'm good with that. I'm okay with that. Or, hey, here's how I work. I call my clients every quarter, and here's when you should expect my call on this date, somewhere between the 5th and the 6th. I call all my clients. Great. If that's good for you, fantastic. So I think that finishes our presentation. I think it's back to Brittany if we have any questions.
Well, I just wanted to add one more thing.
Sorry, Sarah.
Your last 2 words were financial goals. And I think that is really, really important, that you need to know. Everybody will say, oh, yeah, I want to retire at such and such. But you really do need to do some research and figure out what your financial goals are. Because if you don't have those goals, you're going to have a hard time having somebody help you to get there. So I just kind of wanted to throw that in too.
That's great. And what I was thinking was, I did a class on this a couple months ago.
Got it.
So Brittany, if you want to throw that link to that class that we talked about goals in there at the end, I think that would be a great thing for anybody that's listening that they haven't heard that one, or they want to get that information, because you have all those nice printouts and handouts that are all interactive, that they can put their finances in. I think that would be a great thing too, if we could drop that on there for the video that goes out on Friday.
Definitely will. Thank you guys so much for a wonderful presentation. This was great information. Thank you both.
Thank you.
You're welcome.
So we're going to go ahead and transition to Q&A right now. And for any members who are listening in, it's still not too late to submit a question. Simply send a message in the chat, or you can also email us at financialwellness@nar.realtor. And please note, for this webinar session, the recording will be available for your review on Friday, August 7th. You're going to just visit nar.realtor/CFSW/webinars. So Tim and Sarah, here is our first question. So can you guys recommend any best practices when it comes to allowing dual control access to business accounts, for maybe employees who manage their finances for your business? So for example, if you're a broker and then you have someone who helps run the books and they need access to a couple of accounts, what do you guys recommend as some best practices to help control who sees what or getting access to the account?
Sarah, you want to jump on it?
I just want to tell a not so good story. I was doing a loan for a self-employed borrower. He's actually a developer, and he had a collection on his account. And I said, wow, your credit is perfect, but you got this collection. He goes, I don't have a collection. So what turned out was that he had 2 employees, one of whom had ended up embezzling $18,000 from him because she was taking the money from his account and diverting it off to herself instead of paying a particular bill. And as he said, if she'd needed the money, I would have given it to her. So I think the key is that if you are giving any dual access to anybody that's working with you, you will want to make sure that you've gotten a background on them, and that you two are not just saying, just giving them the absolute control. You're going to have to keep checking it.
Right.
And in my office, all my finances, I am given reports once a month that I verify the money that was spent, the authorizations of money that are spent. So yeah, if you're giving dual access, there needs to be a checks and balances as to, on a monthly basis, because even some of these bigger ones, it could be a lot of money very quickly. You need to have a double check, some checks and balances to verify the money being spent, being checked, or being checks written or deposited, however they're going out. You authorize those bills and that money is accounted for.
Perfect. Thank you, guys. Here's another one. This is going to be more in terms of working with your financial advisor. So if you currently have a banking relationship that's not meeting your needs, how do you sever those ties to seek a new financial advisor? Or maybe you can even address it if it's a financial institution. What do you guys think?
It's your money. You have got to do everything you can to protect your money, and you are the ultimate protector of your money. And if you're not happy, you make sure you go find the person that you want to handle it first, and then it's pretty seamless. you can just write a letter, and that person that you go to will actually take care of contacting your previous financial advisor, so you don't even have to have that personal contact.
Right. Good
Been
point.
there, done that.
It's your money. Remember,
It's your
if
money.
you're at Vegas and if you're sitting on the table in Vegas and you want to get up and walk away with their money, that's about the only time it's not your money.
How about another one in regards to getting referrals? So Tim and Sarah, you guys briefly touched on this. Once you build that relationship with that financial institution, and you talked about, talking to the tellers, talking to the security guards, is it appropriate to ask, your financial institution to keep your cards on file? If you could pass along any information about maybe a client that they're working with who's looking to buy or sell a home. What do you guys think on that?
Yeah, from a standpoint of choosing and selecting an institution, that's probably one of the things you want to have a conversation with the branch manager about, and have that discussion when you're setting up your accounts. Hey, as a real estate agent, is there any way for me to be able to promote my business and I can promote you, and we could work in collaboration and have that? And they go, oh, well, I'm sorry, we already have 17 real estate agents, I can't add another one. Well, then maybe that's not the branch for you. Maybe not. You're going to feel it. You're going to know it. You're going to understand it. One of the other things that I like to do is, I don't know where you guys shop or whatever, but I got the Dollar General Tree, dollar store, see whatever, dollar candy aisle type situation. And I buy lots of those boxes of dollar candy, and I give them to people. Like, hey, here's oh, you like Milk Duds? Okay, I get Milk Duds, and I do that. Or I got fish, just those it's like a dollar movie box, whatever your favorite store is, go get a dozen of those, and don't keep them in your car. It's kind of hot. But you can always, give those as a treat. Say, thank you for the service you give me. I just want to thank you. So those things mean a lot to people, just to get a small token.
Yeah, and I think also if you, a lot of community banks, as with the community bank that we are associated with, we have a lot of opportunities. We have a foundation, and at that foundation event that they have once a year, everybody gets the opportunity to go there and kind of, obviously for a contribution towards the charity, but to be exposed to all the people who come. And I think that we have 3,000 or 4,000 people come to that event, and it's just a real opportunity that we do really encourage our customers to do business with our other customers, just because it helps everybody if we do that.
Very good point. I'm just trying to see if we have any more questions. Let's see. It looks like we're good on Q&A and chat. So again, if anybody does have a question, remember you can also send an email to financialwellness@nar.realtor. Before we go to our next slide, Tim and Sarah, do you think that you both could leave us with one more closing point or statement that would be a great takeaway for our listeners to just leave with at the end of this webinar?
You want me to go first?
No, you go ahead, Sarah.
Well, so when I was at Virginia Tech and I was studying finance, I had a professor, and all he talked about was OPM, and it's other people's money. So it's really important that you use other people's money when you get that opportunity. And right now, with interest rates as low as they are, and the returns on the stock market and various investments being that much higher, I highly recommend that you use other people's money, OPM, as Dr. Bonomo used to say, and save your money and squirrel away your money as much as possible.
And since Sarah used the money reference, I will go with the referral. Make sure you're building relationships for referral. Small tokens, small trinkets, small things that tell people that you know them, you've heard them, you're listening to them. A box of Milk Duds to somebody who is having a bad day, and they just see a box of M&Ms sitting there, it's something strong, it's something powerful. So build those relationships, build those referrals.
Good.
Perfect. Thank you guys so much. This was such a fabulous presentation. Really appreciate both of you for your time and input on all of this. Thank you both.
Our pleasure.
Welcome.
So this concludes our webinar. Please do not forget this presentation will be available on Friday, August 7th. So for additional platform resources, you can visit financialwellness.realtor. And lastly, if you have any questions directly for Tim, you can also send him an email. I will be posting his email in the chat box. He says he's happy to address any questions as well. And then earlier I did mention that the PPP application deadline has been extended till Saturday, August 8th. So if you do want more information regarding how to secure your business through the CARES Act, we do have some testimonial videos that you can actually look at. You'll just need to visit nar.realtor/financial wellness to hear that informative testimonial video. And don't forget, you also have access to additional resources provided to you through NAR's Right Tools Right Now resource. This relaunch program includes reduced or no-cost tools to support you through challenging times. So just visit nar.realtor/Right Tools Right Now to access webinars, educational resources, and timely market reports for your business. So thank you so much for your time. This concludes our webinar. Special thanks to our members for joining the call. And if you missed any part of this webinar session, again, we will be posting the recorded PowerPoint and the session under nar.realtor/CSFW/webinars. I repeat, the recording will be available for your review on Friday, August 7th at nar.realtor/CSFW/webinars. All right. At the end of this session, a survey bar will pop up on your screen. Please leave us your feedback on today's presentation. Thank you so much. We hope that you can join us for our next Financial Source webinar on August 26th at 1 p.m. Central. Thank you very much. Everyone take care.
Thanks, Brittany.
Thank you.